Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and also just the total cryptocurrency market cap. We're just going to do an update. I talked a little bit about it in the live stream yesterday, but in case you missed that, I want to go over it. So please go ahead and subscribe to the channel. Please give the video a thumbs up, and also check out the Telegram channel, which you can see up here in the upper right hand corner. You can come chat about these charts, talk about crypto in general. And if you want to join the premium list, you can check out my website at intothecryptoverse.com. So, we've talked about this chart before, and I just wanted to, give some of my thoughts on it again in case you've missed it or you just want an update. So again, the red line is our fair valuation trend line, and again, this is somewhat arbitrary based on how I defined it. But again, it's just our typical logarithmic equation, our regression equation. That's just 10 raised to the a times L of x minus b, where x is number of days and a and b are just simply fitted coefficients to minimize the sum of the difference of the logarithmic difference between the price and the regression line. And then this red line is what you get when you do that. And the reason I'm using it is just because I feel like if you look over the macro scale, it tends to do a pretty good job of showing the bear markets when things are undervalued, and then the bull markets when things are overvalued. And you can see that I guess I should say it's during the bear market where we go from that huge speculative bubble back to being undervalued during our I guess I should say accumulation phase rather than bear market. I mean, this is the bear market. It takes us from the speculative bubble to under evaluation. Again, speculative bubble to under evaluation, speculative bubble to under evaluation. Undervaluation, I should say, not under evaluation. I posted this video this chart a few weeks ago, maybe a week ago or so actually, and the undervaluation was around negative 40%. And as of June 1st, and I think that's probably come down a little since then because we dropped down from 10,000 back down to 9,500 or so. But as of June 1st, which was yesterday, the coin market cap, the total cryptocurrency market cap was 284 billion, whereas our trend line says the fair valuation would be 415 billion. So last time we talked about this, maybe a week or two ago, our undervaluation was negative 40%. Now it's at negative 32%. Maybe now it's back to say negative 35% or something. I'd have to check to see what the current fair valuation is. But a lot of you have been able to notice during the last week the surge of a lot of coins. I mean, not only Bitcoin, but you've seen a lot of other coins make moves, like Ethereum. Ethereum moved from like 200 to 230, 240, it even hit 250 at one point yesterday, I think. A lot of other coins have been moving, like Cardano, Chainlink, and several others. And while these moves seem really good and you're getting a nice ROI, it still barely moves this thing. It really puts into perspective how incredible these moves are to our overvaluation phases and how long they can last. So for the people that are getting excited over, say, these tiny little moves in here, which is basically nothing than just statistical noise, ultimately what you're looking for is to see a move over the next several years, which will take us back into this region, up over here, where we're going to be significantly overvalued. And it's going to take us a while to get there, but I think patience and then picking the projects that you really think are worthwhile to hold during this market cycle is important, and not just picking random coins. So again, we'll continue to update this chart because I know it seems like people do like it, and it just shows our typical undervaluation and overvaluation of cryptocurrency, including Bitcoin and all other cryptocurrencies. And then I also wanted to show this equation, these logarithmic equations, to again show that despite the movement that Bitcoin has seen in the last few months, we are still within our regression band. So if we say, fit it to the non-bubble data, and then we have our uncertainty band to say, okay, well, this is where we're going to be purchasing Bitcoin. This is not financial advice, but just say, okay, historically speaking, when we're in this band, we're doing quite well if we're purchasing in the short term. Now, again, if you're concerned about it going down to, say, 5 or 6K, and you can't stomach that, then this probably isn't the market for you. But if you can live with that, if you can live with the fact that there's a good chance that, there's always a chance that price might retrace, then, just continue to accumulate. I'm not saying it will. I mean, I personally am leaning more bullish than bearish. We'll see what happens, but again, it doesn't matter what I think. I just stick to, the principles that I talk about on the channel, the risk metric, as well as just looking at other charts like, like the one you see here, to identify where are we within the market cycle. I'm sure many people are, get tired of seeing the same type of charts over and over, and I see some of those comments, but then I think to myself, a lot of other YouTubers just pull up TradingView every single day and show the same price chart. So at least I'm trying to show you guys some custom stuff, and while it does seem like maybe I'm hammering this stuff into your head, at some point when we're off over here and we're getting up to the near this upside, I guarantee there's going to be people that say, I wish I'd bought in this regression band. Like I wish I could have bought down here, and I'll just point you to the 100 videos that I made, saying that this is our accumulation time. 2019, 2020, part of 2021. These are the accumulation times. These are likely the times when in 2023 a lot of people are going to look back and say, man, why couldn't I have bought Bitcoin back then in 2019 and 2020? Why did I wait until 2022 or 2023 or 2024? Why did I wait? Why didn't I do it back then? So just stay informed. This is why I try to provide these basically daily updates on the price, because we saw a pretty interesting move yesterday where I moved from 9,500 to 10,000, over 10,000, and straight back to 9,500. But this really isn't cause for concern, because in the grand scheme, the price didn't really move that much between days. If you don't look at the wicks. If you guys like this content, by the way, I just want to remind you, you can always check out my website at intothecryptoverse.com and access the premium list with a weekly newsletter report with data science models, with risk metrics, a premium video to go with it, as well as access to a Google Sheets dashboard with risk levels, along with a ton of other stuff. And actually, I just made a new sheet on that dashboard that allows you to look at the different risk tolerance, the different types of risk tolerance that each person might have, and then it goes through systematically different sell strategies for the next market cycle, and then you can basically put in what you think the projection for Bitcoin, the projected price you think it's going to be, and you can then also put in how much Bitcoin you have. It's all anonymous, of course, and then you can then see, based on whatever risk tolerance you follow, whatever selling scheme you follow, you can see what your projected return would be. And I should tell you that I've seen this before, but I think it's useful to just lay it out on the page for everyone to see. And the feedback I've gotten from that already is really great. A lot of people are saying, okay, now that I see this, I'm completely changing my strategy because it's different than what I thought it was going to be. So if you guys want, check it out. You can always sign up for a month and see how it goes. And if you want to sign up for longer, if you want to join the premium list for say 6 or 12 months, you can do that by paying with cryptocurrency and even getting a nice 5 or 10% discount. Even with for paying with 12 months, I think you get slightly more than 10%. Let's go ahead and jump into the price, because I know a lot of people, while they like the data science models and that type of stuff, it's also useful just looking to see where we are with the price. And as far as I'm concerned, nothing's really changed. I mean, we had a fairly significant move that happened in about 5 minutes. We went from like 9,500 to 10,200, 10,300 in a few minutes, but we ultimately retraced back to where we were before that happened. But on the weekly time frame, you can see this is nothing more than a wick. Our weekly candle here closed up. We were saying, okay, maybe we're going to close down, maybe we'll go up. It's not sure which way we're going to go. Clearly, I mean, it's not like I have a crystal ball or anything. And we went up, and then we said, okay, this is bullish for sure. I mean, we're holding. Not only we're staying healthily above the 20-week, but we're also above the 50-week. So again, if you're looking for resistance or say support regions, if you see us dropping, I would say the 50-week is where you would want to look first. It's around 8,800. The 20-week is below that at around 82 to 8,300. So these are going to be key support regions. And remember, dropping below the 20-week is a pretty big milestone, because when you drop below it, the rest of the market tends to bleed more. So just take this into consideration if you're trying to say limit your potential losses in a sense. Again, this is not financial advice. This is just what I've noticed in the markets for a long time. Going below the 20-week, or I should say printing a weekly candle closing below the 20-week, usually is not a good sign in the short term. But with that said, Bitcoin is still very bullish in terms of, just looking at its weekly candles, looking at the daily candles. We're still moving up, generally speaking. And I said over here, I said we're likely not going to spend too long in the $9,500 region. We moved to over 10,000. We came back, but over the next couple weeks, I think we're likely going to see, again, either a definitive move to the upside, going into the summer, and then maybe even getting back up to like 14K, if we can repeat what we did last summer, or we're going to come back down and test the 50, maybe then come down and test the 20. So I think we're going to go, we're going to go one of these directions sooner rather than later. But the important thing is just be prepared for whatever happens. If you see us start to move up really quickly and you see a lot of money pouring into the market over the summer, then you need to be able to react to that. If you see us go down, the question is, were you already overexposed now? Would it have benefited you to have some capital on the sidelines to take advantage of a move to the downside where you can get into the market? And it's amazing how quickly things can change in this market. Down here, people were saying Bitcoin's going to zero, and now we're up here. It's literally only like 2 months later, and the entire sentiment has completely changed. So don't let moves like this scare you. They're par for the course within cryptocurrency. You're going to see this happen all the time. If you're new to Bitcoin, if you're new to crypto, this is going to happen. You're going to see candles that are going to scare you, and this is why it's important to not be too exposed into the market, because if you have more invested than you can afford to lose, or if it's, say, a significant percentage of your net worth, then this can really cause you a lot of worry. Which is, for me personally, is why I don't invest, more than say 15% or so in crypto. Despite the fact that I strongly believe that crypto will see amazing returns over the next 3 years. If Bitcoin, I've said this before, if Bitcoin drops by 50%, you don't want your net worth dropping by 50%. So again, stay focused on the bigger picture. Don't get too consumed by one single asset that is so volatile, and we really don't know where it's going to go in the short term. As many people did not think it was going to drop from 10,000 to 3,800 in 3 weeks. Okay, this was not on a lot of people's radar. So remember this. So just stay focused. One of the things I thought was interesting is that it looks like, basically because of some of our recent price movements the last few months, it looks like the 50-week, so if you look here at the 50-week moving average, let me just try to delete this line. If you look here at the 50-week moving average, it looks like it's starting to change its slope. So it was increasing, and now it looks like it's barely starting to decrease, which is likely, I'm sure it was encouraged by this significant drop here, as well as, over a year ago, we're no longer counting prices that were, part of this significant move up. As we continue on, we're including more of these prices. So I imagine this will likely to continue to decrease in the short term. And because of that, we'll likely see the 20-week cross the 50-week. And if you look back at the last market cycle, actually, we saw the same cross, but we only saw it once. We saw the 20 the 20 week. So the 50 week is the yellow, the 20 week is the blue. We saw during the bear market the 20 week go below the 50, and then when the 20 week went above the 50, it was then a bull market. And in this situation, we saw a similar thing. We saw the 20 go below the 50, it reversed, and then it reversed again. And now we're maybe going to reverse to the upside again. So this is bullish because you're seeing a short-term moving average go above a longer-term moving average. So this is generally a good sign. But during an accumulation phase, if you see these oscillate a lot, if you see a lot of these crosses, it could just mean there's just a lot of volatility, and that it's not necessarily going to continue going up in the short term. As you know, we've had many golden crosses and death crosses on the daily time frame during this market cycle. But during the last market cycle, if you look, it was after the 50 week went below the 20 week. This is when we never saw the 50 week again until after the peak of the speculative bubble. And that's where we came directly down to before bouncing back up and holding the 20-week moving average as resistance. So, in terms of, say, our lengthening cycle theory, it makes sense that these things get, elongated. We maybe see the same type of indicator pop up a few times, and this could be one of them. So the question, right, is, are we going to see a similar thing? We know it didn't happen the first time because ultimately we crossed back over. But is this the time where we're going to see, the 20 week go above the 50, because you can see the 20 weeks going up and the 50 starting to go down? And will this be the last time we are at the 50 week for this market cycle? And the 50 week being $8,800 or so. I clearly don't know the answer to that. I mean, even in the short term, the price could drop down to the 20 week, and you're still likely going to see these two cross, just because of the fact that as we move forward in time, the 50 week is going to start, not including some of this data here, and it's going to include more and more of the drop rather than the prior move up. So you have to take this in consideration and maybe think that we will likely see a cross even if we drop, even if we start dropping, and to think that maybe this this could be the start of a bull market. We don't know yet. Ultimately, we need to test the 20-week moving average, I would say, for weeks or months before we can start to definitively say, okay, some confidence is going to resume back to Bitcoin and the cryptocurrency market. And hopefully, what we see is I imagine we'll just continue to move more or less sideways this year. And some of you might say, well, earlier you said we're not gonna stay at 9,500 very long, and that's true. I think we're still gonna move sideways because remember, plus or minus a few K. If you're saying plus or minus, say, 4 or 5K, I don't really think it's more than just a lot of noise in the market. And ultimately speaking, this is just our accumulation phase that will inevitably lead us to another speculative bubble, taking us out to 2023. So I know I've kind of rambled a little bit in this video. I just wanted to give an update because a lot of people saw that move today. And again, here you can see the golden cross that took place where the 50-day moved above the 200-day back in May, or let's see, it was like May 19th or so. And we even said, maybe we would expect to move to the downside based on prior golden crosses, and we did see that. But again, our typical our macro view has continued moving up. So this is a good thing. Hopefully we continue to stay the course and we can hold the 20-week moving average. But if not, we'll kick the can down the road, and it just gives us more time to accumulate. So just stay focused. If you want a plan that I have developed, then check out the website intothecryptoverse.com, and you can get access to all sorts of stuff. We have tons of reports, tons of premium videos you'll instantly get access to. So check that out, and at least subscribe to the channel. Check out the Telegram channel. Give the video a thumbs up, and I'll see you guys next time. Bye.